The Canadian dollar is attempting to reverse last year's abysmal performance against the US dollar after posting a monthly gain. But is the loonie benefiting more from waning greenback sentiment? And positive news in Canada? Considering the latest GDP data, it might be the former. According to Statistics Canada, the gross domestic product (GDP) growth rate was 0.1% in November and 0% in December. The November performance matched the market consensus, while the December rate also lined up with economists' expectations. On an annualized rate, the Canadian economy might have expanded at 1.6% in the fourth quarter, down from 2.9% in the third quarter. Overall, in 2022, economic growth was 3.8%. That said, gains in the public sector, transportation, warehousing, and financing drove growth in the GDP. But there was a contraction in multiple sectors, including accommodation, construction, and retail. It is evident that the Bank of Canada's BOC rate hikes are traveling through the financial system and weighing on the economy. But the debate in the coming months will be if the central bank can achieve a soft landing or send the country into a recession. Officials announce that it would hit the pause button on rate hikes to assess the situation and determine what interest rates are doing to the economy. But will it prevent a recession? Pausing interest rate hikes won't prevent a Canadian recession in the year ahead. A mild downturn is probably already a given in light of the current restrictive level of interest rates. Housing market activity looks to be nearing a bottom following a sharp correction over the spring and summer. But the residual impact from higher interest rates will continue to ripple through, as fixed-rates mortgages are renewed for instance. This will soften consumer spending in the quarters ahead, RBC Economics said in a research note. In Canada, the share of household disposable income eaten up by debt payments will spike higher, to record levels, by the end of next year. Higher household debt payments and inflation are expected to subtract an additional $3,000 from purchasing power per household in 2023. The numbers bolstered Canadian government bond yields, as the benchmark 10-year yield added 1.2 basis points to 2.924%. Meanwhile, the Canadian dollar has been off to a strong start in 2023, rising NEA RLY 2% against the buck. The USD-CAD currency pair fell 0.63% to 1.3304. From an opening of 1.3389, at 17:48 Greenwich Mean Time on Tuesday. The Euro-CAD declined 0.41% to 1.4466, from an opening of 1.4520.